let's discuss the SPX trades that we took yesterday and today and basically go through my thought process behind what I saw. Everything's pretty straightforward, honestly. Yesterday, the initial puts that we took on SPX was right around this area here in this range. I forgot what we took. What was it? 4160? Yeah, 4160 puts. And I told you guys if this invalidates, then we set a tight stop loss like around 28%. Reason being is if we do invalidate this trade, this is going to see the upside target of 41.9131. So we did get stopped out, invalidated, and then we just waited for that 41.9131 to hit. Once that hit, you waited for the rejection. As you can see here, this rejected. Okay. Huge rejection. 5-minute also closed with a bearish engulfing right at that 41.93. Now, when you actually look at the RSI and things like that, okay, pretty straightforward bearish divergence here. You guys know by now that I typically like to use RSI for divergences rather than just looking at oversold, overbought, because that doesn't mean jack shit to me. Things can stay overbought and oversold for weeks, months at a time. So this is your bearish divergence here. We also see it on the 3-minute. Okay, it's pretty evident. This was actually the conviction I had to get back into those puts. We got in right around this area here after this initial dump. If I go back to the 1-minute, we can look at it. So we got in like right around this area. And we took 4160 puts for 275% all the way down. Right in this area here, we started seeing a bear flag build. This is where I took profit on the rest of the 4160 for 275%. And then I rolled into the 4150. Okay, pretty evident, like small child bear flag that you got going on here. And obviously a lot more room to come. One of the things that I found before we got into this trade and what I was watching all morning was, number one, this zone right here that I drew out, this purple box, I've extended it all the way to today, obviously. But yesterday, this is essentially the target that you're looking at, which is right around 4160. Okay. Number two, this whole thing, the velocity and the trajectory of this is going to happen on the way down. There is nothing in between to support this. This was the big move that I was looking for. So because of that, the 4150, we took it as well. And for this one, we got 200% out of it. I think we sold right before the box, right before the zone hit. Once that zone hit, I think at some point, I forgot here, right around this area, we rolled it down to 4120 for another 70%. This was a pretty straightforward plan. You just have to be patient. And now we go into today, and we just took SPX puts again, pretty much the same setup. What's different now is that we had this gap that I drew out for you guys in the morning to watch out for. This gap is from the close of Wednesday into the low of Tuesday. Okay, so you had this huge gap at 41.41 and then 41.19. We gapped down from it today. We opened in the middle of the gap. We popped, we gap filled. And then what happened? We rejected the gap fill from yesterday. So that's confluent data point number one. Number two, if you actually just draw the fibs from yesterday's high into today's low at the bell, you're going to see we rejected the fib as well. And what other people like to call the golden pocket. Okay. So gap fill rejection, fib rejection. Okay. We got the pop off that as well. And what you're going to notice, if you just draw your trend line, zoom out a little bit, you're going to see multiple bear flags being formed at all times of the day. So you have your macro bear flag here, which is this red one. Okay. Then you have your child bear flags within the structures. So you have one here, you have one here. And we got into the 4120s earlier, around here, I believe. Somewhere in this range. We took it down to here, or we might have gotten here. I don't remember. But we took it at 150. We trimmed that 190 right into that same zone that I showed you guys from yesterday. Okay. That was our first trim for 27%. And then I let the rest ride because I'm in profit already today. I'm in profit for the week. So even if this goes to zero, it's not doing anything to my port. But I still had conviction, which is why I still held it rather than setting a stop at break even. You guys know the rule is generally set your stop loss at break even after you trim. But in my case, I still had conviction in this. So after we held the zone, you can obviously see it trended up, but very low volume today. This was also during lunch. And then what you're going to notice again is that we rejected the fib once again. And now what is happening? We are printing a lower high from today's high. And we're also trading below the initial high that was formed. up here, which is of key importance, like right around 10:40, 10:45 a.m. So we're now trading under that as well. And if you look back at the macro bear flag trend line that I told you guys, this red one, we're barely closing above it. This is now a bearish retest. Also lines up with the fib. So what happens? I continue to hold. By the time we got back down here, it went back to green. Then what did I do? I ended up selling for 113%. That's it. I'm out. But like I said, I had conviction that this was also going to go in the money. So for now, I still have the 4080p lotto, which is pretty much worthless unless we get a big move. But this is essentially what you're seeing. So now we're back into this gap fill box between 41.19 and 41.44. So if we continue trending lower, it's pretty evident on what you can expect, right? 41.19, 41.20 is essentially the macro target for today on the put side. So if I actually take a look at these puts now, I initially had my sell at 550. It's now trading at 470. And I got it out for over 100% from 1.5. So great trade. Looks like this 550 is going to hit. But this is the thought process behind this, right? Honestly, we didn't really do too much today. We printed on individual names that we took, like we took Snow, we took Meta, we took Moderna earlier. Everything worked out well. SPX, we didn't touch as much as we usually do. And mainly it's just because I was waiting. All right. So this played out. Sometimes you have to let your conviction play out and just be patient with your positions and just see it out. At the same time, manage the risk accordingly so that if you are in a trade and it doesn't go your way, you should have managed it enough where it doesn't affect you, which is why it also allowed me to hold for so long, because we were down initially like 70% on it. I think it went down all the way down to 50 cents or something like that. But again, these points were all key for me to continue holding. The rejection here of the gap fill and the fib and bear flags and continuation of downtrend. So now we are here, right? Almost met, full target. Any questions? And if you guys look at this right now, look, it's pretty evident. Another bear flag formed here, right? We haven't held above the MA. This is literally the same thing as yesterday. The same exact price action when we shorted it yesterday. So that's it. And now look, 41.37. If we break below that initial gap range, 41.37 needs to break. Below that, we definitely see 41.20. So this is now another target that hit. That's pretty much it. Everyone understand that? Pretty straightforward stuff.
Yeah, very awesome lesson in execution.
Yep. And then you guys know I shared the hold with you guys yesterday where I literally wrote everything out directly on the chart. It's pretty simple. And if you guys get into the practice of doing it directly on the chart, I actually find it even more beneficial than just writing it in a journal after, because you're focused on actually making sure the quality of your trade and the conviction of your trade is there before and while you're taking it. And if you're able to see that, you're quick to recognize when something is not going your way, or why it's not going your way, or why it is going your way. Okay, so these are things that you guys should get into the habit of. But I gotta say, it's been awesome. Like yesterday we did 275%, 200%, 71%. Today we did 113% on the puts. So pretty simple. Everything's pretty simple. You just need some patience, let things structure out. And now let's just see. The 4080 puts are still down. They're now at 40 cents. I honestly don't expect this to come back. It's already 130. But if it happens to come back, we would need to see a pretty big dump within a short time frame for the IV to pop and for this contract to come back. So if we end up getting 41.20, we should be able to get back to break even or close to break even on the 4080. Other than that, if it goes to zero, no issue.